Good afternoon and welcome back, everybody. We continue to have amazing conversations. We talk about a part of our sector which takes us way beyond our own shores. We talk about mines in Africa. We talk with crazy people like geologists. And then we also hear how, and regardless of what we think, in the end, what the country does is important and relevant. And what China and America and India do is also impacting on our commodity prices. So it's a really interesting place to be mining, and especially junior mining. Our next panel is a pleasure because I hand over to James Campbell, and he does it better than what I can ever do it. And that is about financing and funding. Now, I don't know if you should put a diamond miner in charge of financing and funding, because I think it's just smuggling in their case, but who knows? I don't know diamond mining. So with that, James, tell us how to smuggle it. That's what it takes. How do we get funding? Over to you and your panel. Thank you.
Thank you very much indeed, Bernard, and it's wonderful for a diamond person to be represented at the Junior Indaba. I see that there is one other of my colleagues, Dr. John Ward, talking on the Macqualand. So our session is got focused on two kind of areas. The first areas are how do local and international investors and funders view the risks and challenges of junior mining. But what is of obviously particular topical flavour this year is what has changed post-COVID-19. And I'm delighted to be joined by three very, very esteemed lady and gentlemen. Ms. Mamecha Mosh, the founder and CEO of Mosh Capital. Mr. Sean Brown, Executive Director of Acrux Resources, and Mr. Boris Kamstra, a Director of Pangea. But before I get the panel session going, I'd just like to kind of share a few thoughts. Most of these were encapsulated during the discussion yesterday, but maybe kind of to tee up the discussion and to contextualize it, is that it was very clear from the remarks made by the Honourable Minister of Mines of South Africa, from the CEO of the Botswana Chamber of Mines, and many other people, that juniors and exploration are particularly important to drive the next phase of mineral growth in Southern Africa. However, impediments remain, and I'd just like to very, very briefly touch on four of them, and three of them, unsurprisingly, financial. The first one is the need to change the financial system to make it easier for retail investors to invest in juniors. Secondly, to provide financial incentives, for example, the flow-through share scheme that Canada has. And we all know that Section 12J, the scheme in South Africa, hasn't worked, and I don't think has funded one single exploration or junior mining venture. Thirdly, and perhaps a little controversial, relax royalties. Botswana has a 10% royalty on diamonds, and if you're going to be mining a small marginal deposit, for example, which has a 20% profit to revenue ratio, half of that profit goes straight out to the fiscus, and that essentially will kill smaller projects in this country. So those are the three major ones, and then of course the fourth one, about having a transparent and functioning licensing system supported by sound geological information, and then regular filings by those firms working on the prospecting license. So as that as a kind of a tee up, and before I ask the Boris, which I'd like to kind of tee up the panel with, about do you believe there are good opportunities in COVID-19 times, I'd just like to share one very brief example from my own company, Botswana Diamonds, where we have recently acquired Sekaka Diamonds in Botswana, which was Petra Diamonds' exploration arm. We first looked at this 3 years ago, and we liked the asset, but sadly it was a too expensive deal. But during the course of this lockdown, we were able to initiate and conclude a much, much more affordable deal. So in terms of one of the kind of panel questions is, are there opportunities available out there, particularly in COVID-19 times? From a diamond perspective, I have to answer very clearly, yes. So Boris, can you give us your take has the crisis provided investors with opportunities to buy junior assets at a low price?
James, I would say the short answer is no. It's a little more complicated than that. Because what we're seeing is a financial stimulus coming into the market, which is pushing up commodity prices relative to where they were when COVID started, and as a consequence, lifting the respective equity stakes. So, no, there are definitely no screaming bargains out there. However, contrary to, I've been called lazy management in the past, and one of the panelists, Andres Rousseau, started off with lazy investors just go to the index. Quite the contrary. We scratch and dig and look for opportunities every single day. And what we are noticing is that there's a growing divergence between the market cap of most juniors and the quantum of capital that they need in order to bring their projects online. And this quantum is between about 5 and 7 times their market capex. So clearly there's going to be some pressure in that space in sort of projects ready to go, but battling to get the capital together. And obviously, as your superb example shows, one does at times need an adjustment on the prices in order to bring that through. So what we are seeing also is that a lot of capital has been raised into the mining sector, about $7 billion this last year into equity. 60% of that has gone into gold, but in the collective, only projects. So the other impediment one is seeing is this build-up of equity raises that have not necessarily gone to generating progressive movement on the projects themselves, which can put current shareholders in a tricky bind. You're either going to have to fund it all yourself, or you're going to have to take the price that somebody who is prepared to fund it will do. So yeah, I think the opportunities will start coming. I don't believe many of them have been related directly to COVID other than gold. But do you invest in $1,800 gold project? As Paul Miller was saying, you need a pay limit on a project combined with its jurisdiction. And at that kind of price required for a gold project to hit its pay limit, I think equity investors will be nervous. But there are a few projects that we do have our eye on, and we hope to progress them. Our most successful one to date has been Alphaman, which over a period of 6 years was taken from exploration drilling to a full-blown producer. So we're looking for the next similar project out there.
Thank you very much, Boris. Sean, you had your hand up there. You've got something you'd like to kind of follow on there with what Boris has said.
Yeah. Thanks, James. I mean, I agree with Boris if you're looking at equity, for instance, for the gold market. If you're a gold junior in Australia or Canada, accessing the equity capital markets hasn't been easier. But it also depends where you're looking and in what commodity you're looking at. Certain commodities in certain jurisdictions where the access to capital is near impossible. And if you've got a defunct capital markets in a particular area, but you have decent assets, albeit small assets, reimagining how you put capital into those assets, in my opinion, is the great opportunity at the moment. So that's kind of really what we've been focusing on over the COVID period, reimagining how our sector comes out the back of COVID-19 and what does that mean for capital going into the sector. So I agree with Boris, but at the same time, I don't agree with him. I think that there's some very good opportunities around at the moment, particularly in South Africa.
You're based in... Tell us what your experiences are.
First, thank you to the junior Indaba, Bernard, for the invitation. I just want to touch on and follow on what Sean said, and then take it from there. I mean, yes, there are great opportunities, and for South Africa in particular, there are excellent opportunities. And I'm picking this up from the previous session I was listening to, where someone mentioned that March Job will be finding the capital for his gold project, and I kept thinking there are a lot of South Africans sitting on a pile of cash. So it's about how do you actually position yourself to access that kind of capital. From a South African point of view, when it comes to capital raising, I think the markets, this was mentioned by one of the sessions that we hosted at Moshe Capital, where Norman Bazima made a good point that if you're in South Africa, you're fighting for the same capital here with someone who is sitting in any other jurisdiction. So it's about the quality of your resource and the stability of the environment that you are operating in, which is something that we hold close to heart. And how do we actually ensure that our environment in South Africa is enabling by partnering with the Minerals Council, DMRE, to see what else needs to be done. As you mentioned, James, we have partners VSA Capital in London. So we actually see a lot, not just in South Africa, in the UK and in Europe, but also in China, because we partnered with the China mining, we partnered with mining Indaba to do the China edition of the Indaba. So we've seen a lot, but across the globe in terms of investors, capital is available, but it's access to the right projects and at the right terms that the investors are looking for. So as an example, when you look at China, the Chinese are looking at gold assets as an example, but it's about how they want to come into the assets. They don't want to be minority players. They want to take strategic ownership of those assets. Knowing China, then comes the question of how are they going to mine? Is it going to be responsibly? Is it going to be environmentally friendly? But another trend that we've seen is around specs. We, as Moshe Capital, alongside BSA, have a mining spec that is listed on AIM. There has been an increase of raising capital across the globe by specs. In the current year, there have been fivefold on capital raised by specs, not just for mining, but I guess across sectors. It has risen 500% because they have become quite popular. You list one and you find the right assets later. So that is something else that I think people should look at. South Africa is tough still. As a junior miner, it is tough because some of the capital that one would have previously tapped into, so people previously looked at the banks and the likes of IDC. And when you go internationally, it's tough to raise capital for South Africa because they're still perceived, and I call it perceived because I think sometimes our messaging is not right into the market. There's perceived risk around our MPRDA, as well as legislation changes that could come into play. So people, what we've seen, at least at Moshe Capital, is that people would rather put their money in DRC or Zimbabwe than South Africa, which is something that for me is shocking because we have the greatest resources, we have the greatest people in this country. So with that combination, people should be coming here. And we need to go back to that legislation, either communicated well and make sure that we communicate the message that this is stable.
Thank you, Umesh. I'd just like to kind of add a comment on that before I hand over to Boris. That I think my chairman 3 years ago at the same Junior Indaba in the Lessons from Legends said rather tongue-in-cheek, you'd prefer to lose money in Zimbabwe than losing money in South Africa. So Boris, maybe if you could follow on with that and kind of embellish the point about what do you believe to be the most appropriate funding vehicles for juniors?
Well, I think any funding vehicle clearly put out is appropriate. I think where things can get tricky is where you have a blend of them. So you've got some equity, you've got some debt, then you've got a streaming deal in it. And a case in point might be Banro. Now, they had other issues, but it started to get very complicated to work out as an investor, where did you sit in the rank of things? How would the movement in the price of the underlying commodity affect your returns and to the end? So ideally, I think you want a very clean structure to start with, debt equity everyone really understands it. Is it a straight streaming deal, and against what parameters? And again, you can then reverse engineer it and understand what you're getting and where you are in for. I don't think blending them is necessarily a good idea. And I'm speaking from my book, which is primarily as an equity investor. You're prepared to take the largest risk because that you're in line for potentially the largest reward. Now, if that reward is being given away due to a capped commodity price to a streamer, that no longer is the case. So I think there are very innovative ways, particularly the way Mamecha is looking at things, but try and keep it as clean as you can.
Sean, in your experience, you're focused on looking at lots of different projects in Southern Africa and elsewhere. How would you go about suggesting to junior miners to raise capital?
Yeah, so look, James, that's probably a question that I could talk for a day on. But let me summarize. I mean, I think the first thing, is that junior miners and explorers need what's moving the capital markets, how the capital markets functioning, and what is available to them. Now that's clearly starts with looking at the macroeconomic environment. It's looking at your sector within the economy. It's looking at your commodity against other commodities. It's looking at your position on the value curve. But then you also got to consider, where are you in the cycle? I mean, I think that's one of the most important things that we think about here at Acrux is, where are we in the cycle, and what are the most appropriate funding or investment tools for particular parts of the cycle? So what worked today maybe didn't work yesterday or won't work tomorrow. And so I think that there's a constant need to evaluate that. So, financing your business as a junior miner is an incredibly important part. You need to understand how the capital markets are functioning, if they're functioning, and what's available to you. I mean, I gave the example earlier. If you're a gold junior in Australia, these are good times. If you're a junior coal miner in South Africa, these are not good times. And so what's available to you as a coal miner? One other point I just want to pick up on, and I think Mamecha was picking up on it earlier, is kind of, and you mentioned it as well, James, is the state of the junior capital market. Do we have a retail base that understands it? Do we have transparency in the licensing, etc.? And I think the conversations at the Indaba have been very good. We're working towards this, we're working towards incentives. But the functioning of the capital markets for just the juniors in isolation is not enough. You need to have a functioning development market, you need to have a functioning mining market. So the capital, if you look at the value chain from exploration through to development, through to production, you need, as an investor, when we look at something, we consider our entry point, but we also consider our exit point. And so we invest in an explorer who makes a great exploration and gets us up the value curve, but nobody's willing to develop it and turn that into value, well, then it's pointless. So you can't look at it in isolation, you need to look at the whole thing. And unfortunately, while we're doing all the right things in South Africa, talking about the long term, getting this in place, for the short term, I think alternative financial instruments is the way to go. Alternative financing mechanisms is the way to go.
Thanks, that's Sean. Boris, if you could embellish on that, and then I'm going to jump to Mamecha straight after that. I was going to do a follow-up question, and you can answer this, Boris, or the one that you wanted to answer, is that if you're a junior in South Africa at the moment and you don't have an indicated resource, i.e. you can't go and get bank finance for it, and you're in South Africa, so it's possibly more complicated for you to try and raise capital on the Australian, the UK or the Canadian markets. What do you do? But anyway, Boris, Mamecha, if you could think about that one while Boris addresses his question.
I think what you do, if you don't have an indicated resource, even if you have an indicated resource, you're still going to have a very tough swim. And I was listening to the minister's address yesterday, and immediately the pay limit for projects leapt the minute he said, you know, Sibanye, you guys have been a bit on the naughty side. So we continue to do ourselves a disservice. But going back to Sean's point in terms of where you invest along that value curve, it used to be that you'd start at exploration and then it would sort of move up and then only just pre-production would come off of it. That is completely broken. And over and above that, we have a dearth of exploration companies. So the cupboard is bare, really, in terms of inventory for people who are looking to acquire or buy into prospective developers, which with their capital they can take through to the end. People say you've got to throw the capital markets open to all investors to be able to invest in junior mining stocks. Well, you know, in 2008, if you mentioned that you had a desire to go and mine diamonds in Angola and you listed a company with that as your prospect, you would have got money. And regrettably, there's still a whole host of them out there that shareholders who subscribe to the initial thesis, provided they see a ticker on the board, they feel that they may redeem some money and they keep funding it through ongoing share issues. And you have these kind of zombie outfits that remain in circulation, never have a hope of going anywhere. They sort of, you know, just have enough to make it vaguely credible. And I think the market's tightened up as a consequence. And that is being felt now. So, you know, if you've got a great idea, if you can't get money out of capital markets, you're going to have to look at private equity groups. You have to speak to Mamecha. The IDC used to be a great supporter of projects, but, you know, the IDC... Above that, exploration capital is the highest risk capital. It's binary. And you think it's going to go up and it doesn't, you still have an asset which you can redeem for some cash. So the current South African approach where you fund an explorer and then get your BEE. As an equity investor, sorry, that doesn't work for me. It can't work. Because for every one of your successes, you're going to have a whole litany of failures into which you've sunk capital and you're not going to get the money back. And now in your successes, you have to divvy out a whole sector to somebody who's going to come in at a base cost. You know, people always say capital is the most skittish thing and it'll run from the sniff of danger. And equity investors are afraid of only two things. They're afraid of missing on a sure bet on a run. And, you know, for as long as they cannot be induced to believe that they may be able to invest in that run and retain their profits, I think we're in for some tricky times, and what we may see is that the majors go back to exploring already. They account for 50% of the exploration budget. It might be that they start increasing that all the way up and no longer look to the junior market to acquire successful explorers.
Thanks, Boris. And before I go to Mitch, I'd just like to kind of embellish on your pre-2009 comment that I sit in a company called African Diamonds then, which was like the mother or father of Botswana Diamonds. And JP Morgan would take a 10% slug in all the kind of reputable diamond juniors. And they were quite, they looked at this as diversification. They said, look, assuming that there were 10, one of them is going to shoot the lights out because this is diamonds. The other 9 will not. Thankfully, African Diamonds, my company, we made 25 times our money, and it went on to become Karoo Mine and do quite well. But JP Morgan is no longer allowed to do that kind of thing anymore. post the global financial crisis. So the ability of a professional mining investor who believes in a particular commodity, I'm obviously using diamonds as an example, but it could be actually anything else, but then would understand the exploration risk, exactly as you said, Boris, that 90%, if not more, companies will fail and won't go all the way, but the 10th will hopefully be your 10-bagger or something more along that kind of line. Anyway, I've spoken too long. Mamecha, over to you.
I was about to take over as chair. If I was sitting on the other side in the audience and I was a junior miner, I would be feeling quite bleak right now from everything we have said. If you'll indulge me, James, I'm going to pick up on a few things that Boris and Sean said, but also I want to set the context of where we are. Boris mentioned about 2008. I remember those were good times, whether you were an investment banker or you were a miner. Decisions that were made then was based on, this can make money. Maybe it might slightly, but you had access to so much capital. Then the markets changed, obviously, and 2008, 2009, it was tough. And Sean mentioned something about, knowing where you are in the cycle. So as a junior miner, you need, times have changed. You can't just be sitting back and looking at your resource and improving your resource. You need to find yourself in the cycle and where am I and when can I raise money? Raising money has become a whole project on its own as a junior miner. And I think people sometimes take that for granted. It's no longer times where I have a resource and now I can raise money. Just looking at 2019 to 2020 on how much capital was allocated to African mining exploration, that has gone down 85%. We're now sitting at a number of about $2.64 billion, whereas previously it was a much higher number. So already by being in Africa, you already have very little access to that kind of capital. But being in South Africa, if you're in exploration, worse even, we have less than 1% of the global exploration funding. So as a junior miner, you need to change your mindset from do I explore to do I look at brownfield projects that already exist and need very little to actually be reopened. So there's quite a lot that you need to look at. And going to Sean's point about, which stage is my project at, because that determines the type of funding you have access to. If you're an explorer, you have, private equity funds, you have majors that used to put money into this and have an allocation, percentage of their profit is allocated to exploration. And you had the listed exploration companies in Canada and Australia, you had DFI Capital, you had high net worth capital. But sometimes throughout time, that has changed. You need to look at what are my other alternatives. So you still have access to those kind of capital, but it has tapped out, it's less than it used to be. You need to start looking at what else can I actually do. I would say looking at that whole cycle, end to end, you need to know where you're going to get your exploration capital from. I've seen a lot, and in the last 3 years, because we work a lot with the junior miners, we've seen a lot where people have been able to find that exploration capital, and now they're at development. And guess what? Where I thought that by now I can actually get an exit, and there aren't a lot of options. And then you find the exploration capital, but you need to also look at the full life cycle. So you need to actually look at when I'm mining, who are going to be my access to capital when I need it? Because I assume that every junior miner does not only want to remain a junior miner unless you're selling that project to a major, but you need to actually, from a South African point of view, where some of the junior miners are trying to grow into, the bigger league, you need to know your access to capital at every given point in time. So at development, we've seen now a few other options of how you can access capital. So it's no longer just about, equity versus debt. There are a lot of other instruments. I know, Boris, we always want to keep it clean, but the markets are so tough that you need to change that mindset a little bit. I mean, we've done recently 2 junior miners funding, and we ended up having to think about, your trade finance, partnering with your off-takers, partnering with your traders. And sometimes you actually have to look at your suppliers as well, because some suppliers might actually want to come in. So if you invest your materials, as an example right now, you might be thinking of, who am I going to be supplying? Advisors that can advise you on how to actually package your funding at these tough times.
Sean, a quick one from you before Bernard comes in with audience questions.
Yeah, thanks. So we have a saying at ACRUX that we listen to the problem. And what that means is when we sit down across the table from a junior miner, we don't arrive at a single product. We don't walk into that room and decide that we're going to do equity, or we're going to do debt, or we're going to do a stream. What we do is we listen to what they need to do. And I think if you understand cyclicality of our sector, then you can come up with innovative
put to you and you do a company pitch. So now I'm worried. I've got 15 minutes to handle questions and the 4 of you are out of control. Now, I mean, this is like a presidential debate. I'll just talk over you all, okay? I'll shut you up.
We made our largest ever investment last year. We did a 500 million rand investment. And then we also have a new company that we have launched over COVID, which is a partnership with IMS Engineering, taking X-ray sorting machines into the mining sector, but we do that off balance sheet. So we'll fund the entire thing, we'll operate it, we'll be responsible for recoveries, and then
engineering business of yours, is that applicable to coal, or are we just doing another company pitch on me whilst I get you the open door here? Is that a coal or a metal sort of thing?
Yeah, so it's applicable to coal, and that was a company pitch, yes.
Of course it is. And I am extremely comfortable with that, because I think a lot of the people, and I earlier said, I invite a lot of people to this platform, people who I think should get exposure to the like of yourselves, partly for advice and partly to know where to knock on the door. Because I think especially in South Africa, it's not easy to know where to go. And I can tell you not to go to Nedbank, especially with the coal project. That's cool. But tell you where not to go, and then where do you go? I do think both of you and Metro makes the point about cycles and, depending on where you are.
That James asked, are there any opportunities? Well, the opportunity is where 99% of the investment community has run from. That's where the opportunity exists. We have this contrarian approach. And so, within our sorting technology business, the majority of the transactions we're looking at is in thermal coal, because that's where the opportunity exists.
Briefly, because this is a follow-up or a thing, who starts off by saying, realistically speaking, which probably says he doesn't agree with what he then said. What are the best funding instruments available in the current climate for coal juniors? And then he goes on to say, and how do we as an industry help to ensure they have a buffer from greenies, which I'm not sure we should. We should be green enough that the greenies don't need a buffer between us and them. But so, briefly, if somebody knocked on your door, if Safisa and Kosi knocked on your door, and he says, I'm a coal junior.
There are a number of things. Thank you, Bennett, for that question. There are a number of things, and we've seen quite a number of, coal junior miners. And the first thing I always say to the coal junior miners in South Africa is it's an easy entry into mining, but you need to make sure that, I always say, your input, people can actually mine. And then lastly, you must have the output, which is the sales side. So, you must have either an off-take agreement. When people come to me and say, and they're a junior miner and they say they have an ESCOM contract, I get really scared in the South African context. I would rather have you sitting behind a major that already is trying to fill up the ESCOM place. So, the coal. I would say that, previously I would have said go to the IDC, but with the current challenges that has been tapped out, you might still be able to get funding from them, but it has tapped out. Debt depends on whether you are already, with the banks, depends on whether you're an already existing client of the bank. Most of the South African banks are at a point where they're saying, if you're not an existing client, it would be hard for us to actually fund you. So you'd still look there, but I think it's kind of tapped out. And then fourth, there are equity players that are still interested in this space, including high net worth individuals that we've seen back projects in South Africa in coal because they know that they can still realize the right return. So so much definitely to us.
And so expect a call from, you have, over the years, I don't know what you take to look so young, but I know you've been around for 100 years. And over the years, you've now obviously done this diamond thing. You must have a following. Is that a critical component? Is the credibility of somebody who does and deliver and do?
Here we are, here's 100.
Oh, no, I haven't got 70.
No.
Oh, gosh. Let's see what I've got.
Who's at the gate?
I've got to get a grass broom. The man is sitting in.
After 21 years at De Beers, that didn't count. Didn't count at all. You were working in a corporate, you might have done very well in the corporate, but you hadn't proven yourself in the junior environment where you do everything from raising the money to funding the end of the day. So it does take time to demonstrate credibility, and I think that's the most important thing to a grouping of people. And then yes, very much a following is important. I found that in my research on this that those successful explorers tend to come from incubators, for want of a better word, and those incubators are a mix of technocrat houses who do have a following. My chairman, you might remember this, has got a lovely kind of phrase for it, and he calls them the 3 Fs: friends, family, and fools. And you know, when you're doing exploration in particular, those are the kind of people who support you, because if you hit pay dirt, for want of a better term, you will get a multiple. But then you're looking to a different kind of investor once you've actually found something to do that resource development. I think that Sean and Metcha both commented on that. We call that the orphan period, because that's the really difficult part, because it's an expensive exercise taking a discovery source. So yes, I've been doing this kind of thing for almost 20 years now, and you've got to keep on delivering. And if you don't keep on delivering, you know, history is very brief. It's forgotten about quite quickly.
Exactly. And obviously I completely agree. As you know, those of us who grew up in corporate and may even have thought to have been successful find out that it's a harsh reality outside. It's firstly not somebody else's money. It is close money, either your own or friends, family and fools. In my case, those are the same thing. And fools would be my family and my friends. So it's only 2 F's in my case. But then, you know, then your risk appetite needs to be bigger, and yet, you know, you are playing with money much closer to home. So very, very good point you make. Boris, I'll come to you in a few seconds or minutes we've got left, and ask you, so you are sitting there with a picture which is beautiful, but I think there aren't guards around that mine. I think it is quite harsh. I think it is not particularly safe. I think the reason you land on the mine is because if you land somewhere else, you know, it may be unsafe. Why? I mean, so what is it that makes you have a tech dad? Talk to me. Talk to me. I want to understand you. I think you need help and I can't help you. So talk to me.
The mine, the picture you see is 36 kilometers from the nearest, well, it's called a road, but mind you, the way Joburg roads are going, it might just qualify. There are no survey maps. So to design a road, how do you do it? The way we did it, we put a GPS on my back and I wandered through those forests for a good couple of days trying to find the right road.
You are making my point.
Perfectly safe.
Man, why are you doing?
Perfectly safe. When I'm there, I sleep in a tent and I leave the door open because I like to hear the sounds of the jungle and to get the cool breeze over me. At home, I've got an electric fence around me. I've got beams in my garden. I've got an alarm downstairs. I've got a steel door that separates the sleeping quarters from where we are. And we've got a panic button next to the bed. Johannesburg, you can feel safe.
Music, radio,
in the DRC, I sleep in a tent. There's a complete misconception, and that it goes to Sean's point of view, where people are shying away from. Try and establish the reason they're shying away from it, and does that actually present an opportunity? We have not had one security incident on our mine, and you know, I first started going there in 2013. We commissioned last year in May, and not a single security incident.
And I mean, this is part of the challenge. If you are small, and calling you junior with a listing is perhaps even harsh, but you also end up carrying the weight of convincing the people that the DRC is a place where you can mine tin. You have to speak to the ESCOM problems and convince an investor that you know, state-owned enterprises are getting their act together. You have to do all of that, and then in the remaining 30 seconds, you have to talk about how your discovery is going to be a 10-bagger. So it's not easy. It's not simple. And I think it goes to a point Metcha made. Unashamedly, you have to have professional help. It is very tempting to think you're going to do this all on your own. Not likely. And professionals want to be paid by the hour, which is part of the problem, a design problem. And we
And it kind of sucks for
Nuts. I mean, this is what we are trying to create, a place where you can have
really, really
different
close.
views
What
or
does it
different
say about
slants
us?
on a view, and explore a topic in a little bit more detail. I am not bold enough to stand between hungry juniors and lunch. Normally, I provide the lunch, then I know they're storming for the food. Now they have to go and make their own sandwiches, so it's tough out there. Thank you very much. Thank you to this panel.
Thank you.
Thank you very much.